What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an analysis on Polygon. And before we get into all of that, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, please check out that link in the description below. All you have to do is sign up for an account, deposit $100 and choose your free stocks. That's it. So, let's start with their financials, with their numbers. We are on coinmarketcap.com, and for now, Polygon's total market capitalization is around $12.5 billion. They have a tradable volume of $5.1 billion, and as you can see, volume declined for about 35% during last 24 hours, and the market cap declined for about 6%. Let's continue with their official website, and let me start with the definition. Polygon is a protocol and a framework for building and connecting Ethereum-compatible blockchain networks, aggregating scalable solutions on Ethereum supporting a multi-chain Ethereum ecosystem. And right here, you can see that this multi-chain system is akin to other ones, such as Polkadot, Cosmos, Avalanche, etc., but with at least 3 major upsides. It is able to fully benefit from Ethereum's network effects, it is inherently more secure, and it is more open and powerful. What are the challenges that this network is solving? And here is the challenges. Ethereum is a blockchain development platform of choice, but it has limitations. It has low throughput, it has poor UX, gas, delayed POW finality, and no sovereignty, shared throughput, collision risk, tech stack not customizable, governance dependence. And here is the solution from Polygon. And let me quote it for you. Polygon, a protocol and a framework for building and connecting Ethereum-compatible blockchain networks. And here are the bullets. One-click deployment of present blockchain networks. Growing set of modules for developing custom networks. Interoperability protocol for exchanging arbitrary messages with Ethereum and other blockchain networks. Modular and optional security as a service, adapter modules for enabling interoperability for existing blockchain networks. And from the technical standpoint, basically it is a layer above the Ethereum network, which allows users to easily solve all the problems of Ethereum network itself. And let me show you this news. We are on entrepreneur.com, and this article was published on May 26th. And it's titled, Mark Cuban invests in Polygon, says he's optimistic on cryptocurrencies, per reports. So, right here you can see Mark said that he was an active user and a fan of Polygon, and he said, it is a fact, it works well, and most importantly, their user base is growing exponentially. And here is the information about their user base. It added 75,000 members to its user base in a single week, generating almost $1 billion in volume and underscoring the surging demand of Layer 2 solutions. On top of that, Cuban said, I can give them feedback on marketing, and we are in the process of integrating Polygon into lazy.com, which we think will be very beneficial to creating a platform to extend NFTs and personal galleries. And let me show you that this company has a bunch of projects that already developed, and they are still increasing their number of users, and it is very good for this protocol. So, and let's continue with their technical analysis, but before we dive deep right here, please subscribe to my channel, hit the notification bell and hit the like button. This helps me a lot. So, we have this weird structure, and before we can make some measurements, we have to define where we are now. And to do so, we have to define what are the Elliott wave breakdown. And let me show you how I do it. In my opinion, we have this as our entire structure, and with this information, I think we have this structure as our third wave, third internal wave. And let's do some measurements in order to be sure that we doesn't violate any rules of Elliott wave theory. According to this theory, third wave cannot be the shortest one among all 3 impulsive waves. So let's do some measurements. From this bottom to this top, we have for now the length of the wave 1 in this tool. We put the third point at the bottom of the third wave. And one-to-one extension shows us that third wave is higher than the first one. This means it doesn't violate rules of Elliott wave theory. And with this information, we might have next projection, we might have next assumption that this is the first wave, this is the second, this is the third, fourth, and fifth wave right here. And we have to lower this degree. And by the way, we might have first wave right here, and we have to redo our measurement. And I do exactly the same. And yes, we still have the third wave is higher than the first one. It means everything is okay. So, and for now we have this structure as our entire wave, because 5 waves on a smaller scale implies only 1 wave on a greater scale. And this means we can project the retracement from the entire wave. And to make this projection, I pull the Fibonacci retracement tool from the bottom to the top. And what do we have here? We have very good reaction from 0.786 level, and on top of that, let me show you that we had a reaction even from 0.65 level, but it wasn't so significant. And then we poke through this level and bounce back from 0.786. It's quite usual to have this type of deep retracement in second wave, and let me show you that we can assume that this is the first wave and this is the second on a greater scale, because we don't have a triangle right here, and we can have triangles only on the fourth wave. And right here, some of you might say that we have a V-shape correction, but in my opinion, it is just a simple zigzag. And let me show you how I think this happened. This is our A wave, this is our B wave, and this is our C wave. And let me show you on 1 hour time frame why I think so. As you might know, we have to have 3 waves in a B wave strictly, and we have it. It is let me show you, A, B, and C. And we have to have 3 or 5 waves in an A wave, and here is 5 waves. This is the first one, second, third, fourth, and fifth. And as you can see, we have some kind of double bottom or even truncated fifth wave, but it is totally okay. And I think our structure is like this. And we have to have 5 waves on this last wave, and we have it. This is our first wave, second, third, fourth, and fifth. So for now, I think we are completely understand where we are now. And let me clean the chart a little bit. I don't need this mess. And let me show you more levels that might be very useful for us. So we have very strong support at this level. Right here we have this top, this bottom. Right here we have this price action and then bounce back from it. And for now we have this as a support. Next one, we have this level as major support as well. From this point, even from this one. And we hit it to the tick and then bounce back from it. Next one is right here. As you can see, this top acts as a resistance, and right here we have this as a support. And let me show you that it might act, yes, so we have a confluence zones with the 382, 03 and 282 level. It is the entire range of support slash resistance. Confluence zone with the 0.618, 0.65, and confluence zone with the 0.786. So, what to expect next? With the assumption that this is our lowest point, we might have a projection of our next targets. And we know that this is only the first wave on a greater scale, and this is the second. And to make this projection, let me clean the chart a little bit again. I pull the Fibonacci extension tool from the bottom of entire structure to the top and third point at the bottom of the retracement. And with the assumption that we have to land the top of our third wave, we have following target. The main target is at 1.618 extension level right here, and it is at 4.65, almost $65 mark. And next potential target at 2.618 extension level. And it is quite aggressive for now, but it is still possible that we might hit it, and it is at $7.06 mark. And let me show you how profitable might be these two trades. from our current price we have about 128% to our first target and about 245% to our second target. And what to expect next? In my opinion, we might have a slight pullback along these lines, these supports. We might land right here at this support, or we might go even lower. According to Fibonacci retracement tool, we might land at 0.65. So what to expect if you want to invest in this coin? First of all, do your own due diligence. And then follow my 3 simple rules. Do not put the money that you are not willing to lose. Do not go all in and do not put stop loss close to your entry price. And if you want to invest, you can ladder your buys down according to the Fibonacci levels. And this will give you an opportunity to have more attractive average price. And our targets are right here. I defined it just a couple of minutes ago. So from the technical standpoint, that's it for now. If you like my video, please hit the like button and subscribe to my channel. In this case, you won't miss my next video. And see you guys and girls next time. Bye!